Welcome back, everybody, to another show of Digging for Dollars. It's been a while. Matt's been on the road. Matt, how's it going?
Great to be here. It's been a minute, man. It's a fun time to be talking about this stuff. There's Christmas spirit in the air. It's a good market.
I think the world wants to shove in as much interesting news as they can before the Christmas break. Let's do an extended version of Make or Break. I'll throw out some topics and we'll rapid fire riff on them and see if it's a make or break. First topic, Carney and the oil pipeline. Does that make Canada?
16 years I've been in this space. Since I think 3 months in, and I started looking at resources, I have never understood how Canada, with the second largest oil reserves on the planet, sends all of its oil out to get it back and pay for gas. I just don't understand. I never understood it. Carney comes in. We're going to build a pipeline, makes a deal with the Smith. I've honestly, the logistics of it all, well beyond my pay grade, but super make. So pumped. That was awesome.
We should be extracting oil from countries with the highest standards of, environmental standards. I don't know. We Canada as a whole should not be importing energy from anyone. We should be the richest country out there, but we can delve into it. But this is a fast and quick and dirty segment.
Amen. Love it.
Crypto is dying.
Break. 6 months ago, I've been in the crypto space. I love the technology, blockchain. I like it very much. I ran a crypto company. We had 55 software engineers. We built software for the next Ethereum, and then that blockchain didn't turn out to be Ethereum. But the thought process of this centralized ledger without the need for all these different people, especially when you mix it into the AIML world, is pretty interesting. But the not just the amount of people that were buying it and then saying they were buying it because other people were buying it, and then that was going to make it go up so other people would buy it, and the logic of it all just kind of came crashing down about 6 months ago. And so I was out of it. And I think I don't know the space very well right now, but it sure begs the question of gold. And you see gold go up and this go down for the first time. So it's interesting. It's an interesting time to watch.
Yeah. A lot of people back crypto, especially Bitcoin, with the same arguments of why people should be investing in crypto, using the same arguments as gold. However, now that we're seeing a disconnect, gold and silver going up and crypto going down, should we just be treating it as an asset class, such like a tech stock?
It's hard, man, because is it a currency? Is it a commodity? I mean, you have the digital argument. I'm not here to argue about whether the merits of Bitcoin are real or not, because they are. It's real. There's so much money in it now, right? Like, how can it not persist? But I think that as we talk about like makes and breaks, like I don't, is it running to 300 to 1,000? Is it running to 1 million anytime soon? I don't know why it would, because like I don't understand the fundamental principle of it other than like, the inflationary hedge. And I personally right now when the mining market is moving like this, I would rather be in mining than I would be into crypto.
Yeah, well, gold and silver have been the natural hedge to, volatility and inflation, and we are seeing all-time highs. Make or break?
Make. Just the money in the world argument. I was listening to a guy talk today about NVIDIA. NVIDIA is trading at 24 times forward earnings. 24. And everyone's like, this is a bubble. That doesn't sound like a bubble. And what was it? Apple or Google was like 26 or something. I think Costco was 40. Costco, right? So that means that Costco is more expensive than NVIDIA. And I think that the size of these things, we've said it before, you and I, right? The size of these things, like the size of these giant companies, is just reestablishing the amount of money that's in the world, right? So like there was all that money printed in COVID. Dollars are not what dollars used to be. And so we're readjusting in our mining market to what we think should be worth 100, should be worth 500 now. Like it's just the values, and we're going to get into that, I think, when we get into these things. So brings us to, right, copper's making all-time high, golds and silvers, well, probably because these things are worth 10 times as much as they were 10 years ago as the biggest companies in the world. Make.
SolGold rejecting $1 billion bid from Yangtze Copper, a Chinese company who owns a good chunk of them already, but they said no thank you.
What is that, 40 million ounces of gold or something and 16 million tons of copper? Something very, very large. Huge make for the space. Same argument, right? Same thing, which is who That $1 billion is not what $1 billion used to be, right? So when everyone looks Southern Cross, right, $1.5 billion, $1.6 billion, right? Now it's like, well, it's so expensive. And okay, sure. 15 years ago, that number is very, very large, right? Like Ventana was bought for $1.2 billion, and you're like, okay, sure, but it's not anymore. It's different dollar figures now, right? So it's not worth the same, and so we're still adjusting in this market. So that's a great make for the space and kind of really fits into the thesis.
Kind of resets it, even though all deposits and projects are different. That arbitrary number of $1 billion was, a huge number, especially in our space. And that $1 billion takeout was what everyone was gunning for.
Yeah, gold, 1.8 billion for Great Bear, right? What Aurelian was $1.5 billion, and Gold Eagle was the $1.5 billion, and all these things. That kind of like $1 billion to $2 billion was just kind of what they were bought for, and that's the max in the space. That's kind of like what the number was, and it's just not the same dollars anymore.
Yeah, NFG hitting godlike intervals in their infilling program. 220 grams per ton over 10 or 9, 160 grams over 10 meters. These are
crazy.
These are crazy holes. Like, obviously we knew that it was there. These are infills, but the market, almost treated it like a discovery hole. And
I love that we have a royalty on this project. It's amazing. This thing, when it gets going, is going to be great.
It's moving forward. So that is a maker for you.
Yeah, huge make, because you know what, if you can hit those, when you hit anything like that, I mean, I was going back, chatting with you and Denny, I remember when you guys were telling me about the time, when FG was starting, you're like, look at what we were putting out. I was going back, looking at like the results that were coming out. They're just so bananas, and you just don't need that much rock when you're hitting 10 meters of 200 grams. Like, it's just such a high value of rock. That's a big make. $1 billion, there's the number. There's this, NFG $1 billion right now, right?
Another company that gapped upwards, not on exploration, K2 Gold finally got their permits. Pretty expensive. Well, $120 million for an exploration company. I would, say a little bit expensive, but this company a little bit. You've been following it for a while.
I messed up on this company. Huge make. Messed up on this company. I met the CEO and John. This is a Discovery Group company. Denny and I were down at the Canaccord conference 2 years ago, and we met with these guys. They have an asset in California where they had drilled in 2020 these great holes, like 90 meters of 4 grams in oxide, 24 of 10, 30 of something, 30 of 7, or really, really good holes. California has been a huge loser for me in the past. I've always thought that, it's good geology. It's right there with Nevada. Like, it's, you know what I mean? Like, you're right on the border where they are. And, but permitting is always a very hard thing there. So didn't buy it. I think it was 15, 20 cents, 65 cents right now. They have 10 million in cash. And it looks like they're on federal land. And in this environment with gold price where it is, it looks like this is the right time for these guys. And asset is very cool. I think they're drilling in January. I might buy it. Like, I just kind of want to see what's going on. It's this 5-kilometer oxide trend. I don't know what heap leaching in California is like, but like obviously the gold rush in California was a real thing, right? So definitely worth, if you're doing a dig or ditch, definitely worth digging in on that one.
So do you think there's a change in political climate now? Because I remember, go back 10, 15 years ago, a lot of these states, they're almost untouchable. And now we're seeing projects.
Idaho. Dude, when I started, Idaho was like, you can't touch it, right? What's it called? That was Midas Gold. That's now a feature story, right? Midas is now the big antimony thing with the gold thing. Yeah, so Oregon, another one, can't touch. That one's still complicated, but yeah, for sure. I think that it's getting. We'll look at like green light metals right now is this VMS thing in Wisconsin. The only one that is the most complicated that of the bunch is probably Talon in Minnesota because they don't have any sulfide mining laws there. So, but even it's moving. But Talon's hitting the best holes, base metals on the planet right now, and that'll be interesting. If Minnesota ever works in that scenario, then like all bets are off, I think. But yeah, I think that it is opening a bit. That's the protectionist era, right? Like that's why uranium mining was so subsidized in the 70s, and so everything in the US worked. So you're shifting that way again, right? Where again, back to the oil pipeline, Canada open for business. We're doing this. We're doing oil, right? And Carney wrote a whole book on values of green commodities, right? And so now we're permitting oil pipelines, and you see the copper projects are strategic. And yeah, I think it is a very different environment now where people are going to be more favorable towards mining.
Okay, so that will open up, more potential investments and more fun. Let's look at Borealis. Kind of
crazy, $2, amazing. Kelly, yes, He's pushing forward. There should be a PEA out soon on that Sandman asset. What is it? $250 million cap. They brought in a bunch of money from the warrants. I think that again, what's the value of a permit if you have a 600 million, 700 million NAV, which they probably do when you put the two assets together, something like that, 600 US. Discount that, even if we discount that, right, to 400, right, 50% off. Let's just say the PEAs. What's the value of it when you have a permit? If you can make that work and you can roll things up and you can keep it going. So if he can really get cash flow going, I think people are buying into that story. And if he can get cash flow going into that, it's going to be a great thing.
On kind of the same vein, Amex, it's three.
Yeah, what is it? December 2nd today, 10:51 Vancouver time, right? What is it? Just before 2 for you? I think it's 380, right? Again, $500 million market cap. That's, I've always thought Amex is like the Integra of our time. So Integra was bought $700 million back in 14. Man, it's the same money argument, right? You're like, okay, so $2 billion NAV. In the Abitibi, you're like, all right, well, it's $500 million now. It's still not expensive.
Yeah. Get acquired. So what we just mentioned, though, $1 billion isn't what $1 billion was before.
Yeah, totally. Right. So that was why I thought Probe as a deal Probe looked so cheap because it got bought for $750 and it's 10 million ounces. But I don't, these things like we've talked about so many times, like maybe they're all a buy. You just have to redo the market, or we're wrong. But
if you were the corporate development for a producer, would it be, let's come out of the gates 2026, we have to acquire everything or else it's just going to get too expensive?
But they're not, man. Look at this. Look at what's happening today. Today alone, Hemlo gets bought for $1 billion. What's the ticker of that? HE? It's $2 billion today already. Discovery Silver, $7 billion. Orla, right? What else is spun out? The Fuerte, right? Fuerte, we love coffee, right? That project, right? Fuerte is 3x from what it was when it spun out, like a month ago. So these seniors are spending these. Barrick just came out with the news they were going to IPO a minority interest in their North American operations, right? Like maybe, I don't know, the sum of the parts is certainly not what the whole is. And maybe you don't buy these that's the only thing that like maybe people aren't acquiring. It's so strange because all these seniors are spinning out these non-core assets. Are they just going to buy them again in 10 years? Like what happens?
More value in a standalone assets where they can get value for, a lot of the other things that come with.
Yeah, and explore it and like focus on it. It's a credit to like our venture system where it's like a venture company, right? It's like the innovator's dilemma of senior cos, right? They're just like inefficient and the mid managers don't want to do anything. And so you bring in venture companies who are capable of raising the money needed and the capacity to do exploration and to take bigger shots, and look what happens. So hopefully we see a lot more of this. Apparently all you got to do is when you see a senior spin things out, buy it.
Okay. And our good friend and colleague, Denny, renaming Sockman to Pirate Gold, and, out of the gates, people seem to like the name and like the narrative. And, Denny's done a great job in, refining that story and raising money for it. And looks like 2026 is going to be super exciting as he starts putting out some assays.
Yar. That's awesome. It's awesome. Man, he's going to have so many drills going. He's going to have so much news. That thing is going to be a lot of fun with some market tailwinds and a lot of money in the bank. Like, he's going full into storytelling, and that's going to be it's just going to be really fun because what was the best hole they have there? Like 7 meters of almost 600 grams gold or some bonkers number, right? And so that he's going to get in there. He had newfound. It's going to be fun.
I'm not sure if I can say this, but I caught a little bit of a preview of some of the filming that they did while they were boots on the ground. And, I'm pretty excited about how they chose to present their journey. And I think a lot of people are going to be captivated. And, it's just a fun new way of, getting people involved and getting people excited. Okay, our last make or break, and this is probably the most important. Even though we took a couple of weeks off, but it's still, it's Earth Labs. We put out our Q3 numbers, and a lot of people are expecting it. I don't think people were expecting, a book value of $70 million, and seeing our media side finally, catching some traction. And, I wanted to talk to you about it because we've been very open about calling it a Frankenstein. And, you and me both can say that it's undervalued just looking at the book value of it. And, to be fair, we're probably never, or maybe when the markets get really hot, we will be trading closer to that book value or even over at a premium. But, we're really not getting any value for anything else. And so, we're biased, but I would say we're talking about undervalued companies. Earth Labs is probably up there.
Well, let's talk about it. Let's try and stay objective. It's again, this is December 2nd, so our financials came out. Let's spend a little bit longer on this one than we usually would, as it is our own company, of course, and we're speaking on the platform that is in this company. And I think it's worth going into. I think that, when you put it together, we just talked about the senior company and the conglomerate discount, right? So this is a much smaller company than Newmont spinning something out. This is a small company where less conglomerate discounts happen, but the same thing happens, and it's an understanding of it all. But if we break it out, right? If we break it out, let's talk about each piece maybe, right? We can go into venture portfolio first. So, I started at Pine Tree. And Pine Tree in 2007, most notably, was trading at 1.5 times NAV. And the stock went from 10 cents to $40. And the reason for that was because everyone assumed that in our portfolio, I wasn't there yet, but in the portfolio, you'd have both warrants and private companies that weren't being properly reflected in the value kick into the net asset value in the future, which they were. Then when the market crashed, we traded at a huge discount to NAV. When I got there in 2009, I watched as the portfolio moved from 150 to $1 billion in net asset value, and generally traded at about 0.8 in the bull market, 0.9. So for me, in the experience of watching, things like that, or mega uranium with NextGen and the uranium assets they have, it's in a bad market you're 40-50% in NAV, and in a good market you're probably an 80 or 90% 80. But everything should always trade at a discount, really, in a lot of ways, because the liquidity is not there, right? When you're in a junior market with no liquidity, whether you're $1 or $5, you can't sell all your stock at that price. But in a rising market, you'd be much closer to that liquidity. You'd lose your liquidity premium, so to speak. So there's that. And then there's tax, when you sell things for gains, there's tax, right? So trading at 1 times is often a hard thing when you look at it that way. But then again, with the warrants and the private companies, how do you value that, right? I can guarantee that our warrant value is underappreciating an upside in our financials, because warrants are valued on volatility, right? And so if the market keeps ripping, like we're saying it's going to, then it's completely undervaluing volatility. The vol is way higher, in which case the warrant prices are worth way more, because we're making 2 times what you would make on a normal investment. So between that and the privates, I agree. The portfolio should probably trade in this market way closer to NAV, especially when we'll tie this into media right now, especially if media is doing great and making money and break, then your costs are there. So maybe jump into media there for a sec.
So I think when we discuss this, the easiest way to underpin what our media is worth, we recently saw, I would say, our closest competitor, in Stockhouse and Hawk Copper being sold off to a private group for around 6.2 million. We acquired Northern Miner and Mining.com and Canadian Mining Journal for 4 million. That to put together with CEO.CA, which we acquired from Tommy for 18 million. So the base value of that, if you want to pin a value, but the easiest way to pin a value on any business is how much money are they making. Right now, we saw that when the markets are good, CEO.CA is cash flow positive. Northern Miner, as we are working on more products, and it is a little bit more of a labor-intensive business. We're around break even on that. However, we're a venture company. We are still building products that could do very, very well given the current environment. So what is media worth right now? As a venture operation, I would say, at least the book value of what we acquired it for, and the upside is just, that speculative side where people can say, well, if the markets keep on going, these guys keep on doing what we're going to doing, the media side is going to be worth a lot of money.
Totally. And so I think that it's a make. Financials are obviously a make. because we were trading at a $25 million market cap. So it's a make, but upside is a make still. And, we can obviously do a better job of telling the story but really we're trying to let performance speak for itself, right? You're trying to say, look, like, here you go. This is what we're doing. The platform is growing. Portfolio is growing. And, we love it. We love coming to work. We love talking about this stuff. And, I think that as it will be interesting to see, right? Because your downside protected so much, but it'll be interesting to see how this kind of pulls through as we continue to do this stuff. And, it looks, and throw in a few royalties. Why don't you? Throw in a few royalties. Why don't you? Right. So, fun stuff. Definitely a make is not, it's just on the basis of trading at a 25% of NAV or whatever it was, 30% of NAV at the time. And I think the stock's now 36 versus what it was at 20. Right. So that's great. But hopefully we can keep performing over the next few quarters and people get a little bit more comfortable that it's like, oh, these guys are doing a good job. And 100%, like it's a different business than it was, and no question about it. But it's exciting time because you see the Treasure Hunters series is pulling in partners like Agnico and the World Gold Council and Pierre Lassonde and all these guys, and our investments are with people who are really great around the world. And so the network that we're building up is pretty fun. So it's hopefully a good year next year.
Yeah, there's definitely value in being the brand of mining in North America, and as more generalist money come into our sector and they realize that there's only one go-to brand to learn from, to get their ideas from, and see what companies that they're investing in. There's a lot of moving parts, but I think as people are able to distill where our value comes from, our stock price will gain more and more traction, which was
let's bring those the crypto followers into mining, right? Let's tap into that market. Again, size of capital, right? It's like we're just such a small market still. It's like we've got so much room to grow here. So it's fun having having Northern Miner, which has been around since 1919, and mine.com, which is 60-70% of internet traffic. So should be a good time. So hopefully continues to make.
Okay, so our guest this week is Allen Sabet, CEO of Magote since 2022, former operator at a private prospecting group, Prospecting Group Syndicate Minerals, and previously before that he was a consultant at McKinsey, where he advised top-tier mining and resource companies like Woodside, South 32, and Shell. Allen is joining us from Dubai, I believe, where he's at a conference. Allen, how's it going?
Thanks for having me on, Matt and CJ. Great to be on.
Thanks for being here, buddy. You are currently in Dubai for an investor conference. What are you telling people these days?
Well, it's exciting. It's the best time of my life, pretty much. We're drilling into the Filo sewer project, and we just started drilling, so that's kind of what we're talking about.
That's great. Best time of your life is because you're a new father, right?
That's what I wanted to say, but I was like, I stay on the mining track here.
That's great, man. We were just chatting about how this deal was kind of, you started this thing a couple years ago, right? And I was saying that we were one of the first institutions to throw some money into it, and
made it happen, really.
I often say this is the best copper real estate in the world. If you were a real estate agent, you'd be like, this is the best place you could possibly be. So maybe can you just talk about where you are, even before drilling, just talk about where you are, and honestly, for anyone listening, how you got this land. I know it's like dating back a long time, but it's still fascinating to me how this all came together.
Yeah, and we get that question all the time. And by the way, Earth Lab's instrumental in this company existing. So, shout outs to you guys. And you, Matt, specifically. Look, where we are is in the Vicuña District, which is across the border of Argentina and Chile in the high Andes. So the high part of the mountain range actually demarcates the border between those two countries. And that mountain range actually for 1,000 kilometers has been yielding productive mines and deposits, and 40% of the world's copper roughly comes from this area, give or take. I mean, there's some, earlier and later belts. Within that 1,000 kilometers, there's a stretch there of, say, 20 Ks running from north to south that's called the Vicuña District, and it is phenomenal. So in the last 5 years, Filo del Sol was discovered there, I mean the high grade part, and then subsequently sold. I may be telling things that people already know, but just as background. And that was sold earlier this year for 4.5 billion Canadian dollars to BHP and Lundin Mining. And then there was another one that came just prior to that. That was called Josemaria. The transaction value on that as of January this year was about 1.9 billion Canadian dollars, so almost 2 billion. And now, in the last couple of years only, the deposit just north of Filo, like pretty much next to it, but to the north, it's called Lunahuasi. That's with a junior called NGX Minerals. They're currently valued over $5 billion or around $5 billion. And that was what, that's exceeded the takeout value of Filo. And so you go Lunahuasi, $5 billion. South of that is Filo, it's $4.5 billion. And then it's us. And, we are a pre-discovery company. We haven't made the discovery yet, but we've been working here for 3 years. This is our fourth year, coming into the fourth year of work. And we're drilling now, trying to find a discovery. And we've thrown the kitchen sink at the exploration process so far. So that's where we are, and that's why we're excited.
You recently acquired this new piece of land. I mean, when we got into it, you had this, 20-kilometer stretch attached to it. And then you recently got this new piece of land. And you were my Dig This Deal with Jim on from Discovery Group. And I was like, this 4-kilometer new soil stretch that attaches to Filo, literally it attaches to it. That's a new one, right? Is that the new project?
Yeah, yes. It's all contiguous now. So when you look at the map, it's just Lunahuasi, Filo, and then us. But, when you funded the company, when we started, we had not all of this ground. So earlier this year, actually, I think it was in January that we signed the transaction. We signed an option into a part of the district that has never ever been drilled, and it's directly on that Filo strike extension. It's been with an iron ore company for, I would say, between 20 and 30 years. I think it's more along the lines of 30. And they've done something like, in the total 30 year of its existence, they did maybe something like 70 samples across both streams, soils, and rocks, and no drilling. So, and that's now come into the portfolio, and we went and hit it hard. We had our guys mapping it. We had geophysics done on it with vector IP and MT. And we had some pretty good sampling done as well. We didn't manage to do a soil grid because the terrain is quite rugged, and to go and get guys to get to the GPS coordinate of your grid, it just wasn't worth the time versus the return. But what we found in the geophysics and the sampling and the mapping was really compelling, and that formed 3 new targets that are on that Filo strike. So yeah, that's a new part of the project. Yes.
Cool. That's fun.
Yeah. In my introduction, Alan, I mentioned that you raised a boatload of money to, what you said, throw the kitchen sink at it. How much did you raise, and how big of a campaign? How big is this drilling campaign?
Going back to history, CJ, or in the recent.
Oh no, like the most recent mega one. Like you just raised a very sizable amount.
Yes, that was 22.2 million Canadian dollars roughly. And yeah, the idea here is, historic exploration has always gone the way of focusing on the most apparent, most compelling soil anomaly or most compelling surface anomaly. And that doesn't often yield the big discoveries, which are lurking beneath. They're often geophysically driven these days. If you look at Filo del Sol's Aurora zone, there's a 600-meter silica cap there, steam heated zone, and then they had to drill through it, and you can see it's more or less barren, and then they hit the mineralization. Or if you look at Valeriano with Atex, it's deep. And so you can't use the same tools, the same budgets, the same methods here. So we decided to step back with the funding from Earth Labs and others. We've developed a data set that has compelling geophysical data in modern techniques, and also has the traditional and reliable geological methods of mapping, sampling, and geochemistry. So basically, yes, we raised a boatload of money, and now we're going to go drill those targets. And the reason we raised a boatload of money is because we've got a number of really attractive targets, and they're not all going to be drilled in one shot. And we're still going to take a systematic approach to it. And we're going to spend roughly, of the 25 that we have in the bank, we're going to spend roughly 15 million on the first phase of drilling, with the option to step it up if we're finding good mineralization and accelerate, and still have that cash in the bank that we know, we don't want to be perceived as or be a company that doesn't have the cash to do their work. and that's an important part of being a listed company.
How do you find, I know that you and your brother is on the board. I think that, you guys have some technology experience. He does for sure. And you do. And like, how do you guys find, I know you guys have really transitioned into mining. Like, how was that transition? I've done a fair bit of tech, and it's always interesting to ask, right? Like, what mining is so different. How do you feel now that you're engulfed in venture mining versus, we just talked about venture, right? So this is venture capital, right? What we're doing. And so how do you feel in venture capital and mining, and like knowing the tech space, but now you're in mining?
It's really, I don't want to disparage anyone in the industry, but it's really a different clock speed in mining, and that's our advantage. So we're able to turn things around much more quickly than I think a lot of people are used to. And you see the cycles of learning is one of the key things in technology. You build, get feedback, iterate. And in an exploration company, let's say, or a listed exploration company, it's raise, it's drill, and it could be years and years and years before you learn or you do something. Transactions, and I'm sure you've experienced this, Matt, as well, can take a very long time. And that's the window that's open for, people who move fast and with energy to pull things together. Bringing finance and good ideas together with good geology, you can actually put world-class projects together. We've seen a number of very talented young people do that in this space. In the last 6 months alone, I think someone bought the whole Hemlo mine. So,
oh yeah, for sure, $1 billion. Yeah.
I think I've met that guy at a poolside party somewhere. But this incredible stuff can be done if you have energy and ability. And I think this space it's a lot of white space for people who can move fast and who have energy. And that's what I've seen so far.
One of the things I thought was really interesting is when you did this last deal, one of the huge things, when you came in with this new group with $9-10 million, whatever it was of the deal, out of nowhere, I will say. And I think that one of the things I always talk about is how undercapitalized the space is for venture, right? I mean, in venture tech, you have all these giant firms. There's so many. When they back your deal, it's like 7 different, all your financings are guaranteed because they're backstopping it. And you don't have that in mining. I just went through this where people are just like, I'm not going to play. Okay, great. So
you mean with Sterling?
Yeah, it's crazy where you're like, your success is almost a negative. As a fund manager, I understand that as well. Like, you're like, well, I have a huge exposure. It's a public company. I only can write so much of a check. So how do you find the capital access going on? It's a bummer, really. You're like, yeah, you want to maintain, but you can't.
It's along the same lines of what I just said. I feel that this whole thing of not having support from deal to deal, I mean, it happens in tech too. You see, like, Excel led the Series A, and then it had to be inside partners led the Series B or whatever. But
that's so that they can mark to market on an upside, and it's not.
Yeah, I mean, people want to sell off to the next VC and get the mark exactly. But Matt, you do the same as a fund. As you said, the allocations. I think currently what's happening, as you know, is the big money, government backed or DFIs or what you call IFC, World Bank, those kind of quasi-government pools of money are allocating big checks into mining, but they can't allocate into direct equities like us, Sterling or Mogotes Metals. So they're putting it into these big funds. So Orion, Apian, all these guys are raising big $1 to $2 billion funds, and they're still going to have the discretion like you would of not participating deal to deal. But as new entrants come to be fund managers in this space, we're going to get more sticky, longer term capital. We're going to get all kinds of really creative new companies come about that aren't being currently funded by people who have been around for a long time. Like Matt, you'd probably have been approached, and this is just theoretically, but someone approached you maybe 5-6 times with a good idea and you just didn't like them. They would be funded by somebody else, or alternatively, you're going to be able to fund a lot more really good quality companies because they're going to have some oxygen from someone else, and you're not going to be the only one supporting them, which is, I think, a position that no one wants to be in. And that's one of the issues, that no one wants to fund a company all the way through. They want to see a club of 5 or 6 really strong institutional backers.
Especially when there's no cash flow.
We live from equity check to equity check. It's risky. It's a risky business. And, the Braun family who came into the mining space, this is their main mining investment, as far as I know, and what they've told me. Who put about $9 million and cornerstone our last deal. They have agriculture investments, probably one of the bigger cattle operations in Argentina, hospitality, biggest supermarket chain in Argentina, and they just wanted to get exposure to mining and quality mining companies. And I think lots of family offices, lots of institutions, lots of funds, and lots of DFIs are all going to be allocating like that. So
Very cool.
yeah, that changes a lot of the dynamic for us.
So Magotes, news from drilling. I don't know how long assay turnover, New Year kind of thing. That's when we're
Around there, yeah. So we've been drilling for about 2 weeks now. Drills have been turning. We're seeing interesting stuff as usual. It's sometimes good, sometimes bad. Particularly when you enter into rough drilling terrain. And I'm on the phone with the guys like, is this good or bad? Well, it's good geologically, but it's bad operationally because we don't know if we can keep this hole. This kind of stuff. So I know it's exciting time.
Yeah, that's great.
Alan, do you think you're going to go the visual assay route if you pull out some cheddar, or you're just going to assay them and put them out to the markets with real numbers? What's your school of thought?
Probably the assay to the lab. That's the professional way to do it. Like if we drill like 100 meters of straight green rock with 900% vein density, then I might change my mind. But I think most likely we're going to the lab.
Yeah, sounds good. Okay, so I hope you're prepared for this. We're going to go into our segment called Dig This Deal. So I think
I'll be ready, but maybe someone else starts so I can just brush up my numbers here quickly.
Okay, so I think okay.
Maybe
I'll start because
rules of the game though. Hold on, rules of the game. You gotta define it. Okay, so Alan, this is like an elevator ride, right? So you're in Dubai right now. You got one of those really long towers. So for CJ, it's like a 500 floor tower in his deal pitches. But in normal, you got a 30 seconds to 1 minute, and and only rules of the game say don't name the name of the company. You got to say the market cap, say anything you want, how to pitch it, and then the three of us come to we all say dig it, ditch it, or in a lot of cases we dig into it. But the whole point is name the market cap, don't name the company, say whatever you want. 30 seconds to 1 minute. CJ.
Okay, my company. Normally, I dabble in the super microcap companies, and I haven't, and because those are the most exciting because we want that upside. But this company, this particular developer, is $120 million, 100% owner of a fully permitted, shovel-ready mine in mining-friendly Nevada. So, according to the company's last PFS, which was published, almost 10 years ago. The highest sensitivity on it was $2,600 gold. And so at $2,600 gold, it has an MPV5 of 500 million US and an IRR of 110%. But this is the difference between this particular developer and all the other developers out there. This company has no plans of going to production. They plan on keeping all the gold in the ground and offering it to investors as the cheapest and lowest risk way of gaining exposure to gold. So they're essentially using Mother Nature as a vault. Several points. The burn is only $1 million a year. So they argue that it's a way cheaper way of holding on to gold versus buying physical and paying paying a premium for physical and then paying for carrying costs and paying for insurance. They argue that it's cheaper than than buying gold futures and paying the carrying cost that way. And second, they argue that if they take it out of the gold and have the cash flow from selling the actual gold, they would have to go out and find another gold mine. And we all know that it's not easy to find gold deposits anymore. Gold deposits are way harder to find and way more expensive, deeper and more complex. 58 million shares out. It's institutionally owned by one big institution, 46%. And that's, a unique spin on playing a developer. Do you dig it or ditch it?
Ditch. I like this asset. I know this company because we talked about it. I like this asset. It's great. I very much do not agree with playing venture for stored gold in the ground because that's not why would I buy. I'd buy a gold bar.
How about you, Alan?
I'm here. I'm trying to put my deal together on a little laptop screen while listening to your pitch. I have to say I'm not too conversant in the space that you've just pitched. So on the basis of ignorance, I'm going to ditch, unfortunately.
Two ditches. You know what? I wasn't fully convinced of their vision and mandate as well. Like I say, take it out of the ground. You're not going to receive full value for. I think they're only getting, $100 an ounce right now. You remove,
which is still high,
the
right? $100 an ounce is actually still pretty normal. It's not high. It's pretty normal. And your discount to NAV and it's a PFS though. It's I like that project. It's very cool. That's what's the name of the company?
So yeah, Westfault Mining. So they named the company.
Their website is a big gold vault.
Yeah,
it's great.
$120 million. They have it's fully permitted and ready to go.
I would dig all day if
it would look very
dig all day if they push it forward. All day dig, but ditch unless they're pushing it forward.
Yeah,
but for me,
and also it's because it's so closely held. It may be trading at a discount now, but you put $5,000 into it. Are you really getting that upside that you want? And then you're truly just holding on to it as banking on gold appreciation. I like stories where, if they're moving it forward, you get upside, you get, you'll fully recognize how much the gold is worth. You'll get upside on,
I like to talk about them,
potential exploration.
All right, Alan, I'll give you a little bit longer just to prep your screen here. All right. So
Thank
here we
you.
go. So, all right, I like talking about things that are new and improved or new and exciting. All right. I have a $40 million market cap. My team was the project manager on an asset in the same rocks that sold for $2 billion, copper gold. I took my knowledge of this area and I put it into a new company where I drilled 37 meters of 2.5% copper and 2.5 grams gold in Ethiopia. I'm in the Nubian Shield in Ethiopia. I had civil war and bad things happen, and then I got stuck in force majeure. I then partnered with the Discovery Group, found new assets, and I now have gone into the same rocks across the sea into Saudi Arabia, where their venture of mining is a big push. And I now have 450 square kilometers and finding 700 square kilometers of the same kind of rocks, VMS belts. And my push is as geological experts in the rocks, giant land package in a new and underexplored district, completely unexplored district, $45 million market cap, backed with $8 million of cash, giant land package, zero drilling, dig it or dish.
How big is the land package?
It is in total going to be about 1,200 square kilometers. The Saudi, I think that's the 10% rule or something. And then the Saudi, the government is giving $1.5 million. There's great deals there that they're working on. You're in Saudi Arabia though. Awesome geology. Anyway, I don't have to pitch it. That's the pitch. That's it. That's all you got.
$40 million. Saudi seems a little expensive, Matt, but it's backed by the Discovery Group. But I'm going to require more digging. It's a cop-out. I'm going to require more digging.
Alan's land package venture mind is going here, and he's like, I like that deal. I know you do. I thought of it because of you.
Yeah. He's like, land packages are really, really good.
Access to capital, land package. Anyway, there you go.
Is it my turn to answer?
Yeah.
Look,
ditch again.
It's a 50-50. I'm halfway to digging it. I want to know more. I want to know the alteration. I want to know, land packages are not all created equal. And the problem with Saudi is there's been a bit of a rush. So it's not clear to me whether it's good or not based off of your description. Assuming that the ground is good, I would be interested.
Big VMS trend.
Okay, so he's going to dig more.
That's right. That's good. I like that. The company is Sun Peak Ventures, run by Greg Davis. Greg's smart guy. Out of the Sandstorm offices he sits. And basically banking on team and access to capital in a very underexplored district. Sun Peak Ventures.
Didn't Jim pitch this when we had him on the show?
Yes, that's how I found it. Jim was the intro, for sure. No, Jim didn't pitch this deal. He didn't pitch this deal. Did he pitch this deal? Did I just pitch a deal that's already been pitched? Whatever. It's fine.
Okay.
All right, Alan.
All right. Double down. Okay, Alan. Let's go. We've given you enough time.
Right. Market cap, 270 million. We're talking Canadian. They've got $32 million of cash. They're silver exploration company with 232 million ounces of silver equivalent already defined, but rapidly increasing it with over 30,000 meters of drilling a year. Studies, permits, all of that's going to come, but looks like the resource is just going to grow and grow and grow and grow, and it's really high quality silver. It's in a jurisdiction that's ranked very highly in surveys of favorable mining jurisdictions, and looks like it's going to do well.
Okay, not a lot to work on here. It feels like it feels like, well, if it's worth that much, it's going to be one of, there's not a lot of good silver companies out there.
Is my question, I got to dig in.
It's probably a dig.
I have to dig into it. I have to understand what is the breakdown of silver equivalent. Is it actually a silver deal?
It's a silver deal. It's mostly silver. It's mostly silver.
All right.
It's about 2/3 silver, 1/3 gold.
Like it's not like silver, lead, zinc.
No. It's silver gold. It's in Argentina.
Argentina, 270 million. Abra? Who am I?
Am I allowed to? Aren't you dig it first before?
No,
I
I'm
tell you
digging
who
it. I'm digging into it. I don't think I can dig it yet.
It's a Unico silver. And I know I throw you guys off because it's on the ASX. Nobody ever looks at the ASX on the Canadian.
Nice one.
Unico.
Cool. That's great, Alan. Bringing some new heat to the pod. An ASX listed company. For all of those listening, buying on the ASX is a total fun thing to do. I love buying things on the ASX and trading overnight and 9 p.m., 10 p.m. calls is good. But that is Unico. Cool. I think I actually saw this broadcast. Maybe talk about that. But
is there pure transparency on the ASX, Alan? Like, do they know? Like, they know all the buying and selling?
That's right. You can see everyone on. I think Eric Sprott's on for 5%. Big Argentinian investors on for 9%. In Australia, you get the share register reports daily. Yeah,
stops all the shorting issues that Canada hit. The ASX is actually a wonderful place to operate. Just for us, is hell of a different time zone. But yeah,
I recommend setting up a brokerage account because a lot of opportunities over there.
Good one, man. Cool. That's great.
All right, Alan. Safe travels. Good luck on your drilling.
Thank you.
Hopefully the next time we chat, it would be when we're talking about a maker.
1,000 meters. No, that's great, man.
You're really, really fun.
And congrats, Matt on Sterling financing. Well done. All right.
Thank you very much, sir. All right, take it easy.
Okay, bye-bye.
Unico, silver.
Australian deal, hey?
You know what? I've been struggling to find new deals because you can only say so many deals at once. And then apparently I'm just pitching deals that Jim already pitched, but that was a good one. I have a new one now based on Australia.
Yeah.
Anyway, I like that story though.
Okay. Well, that was a good catch up. I like how we were able to review the Q3. We're definitely going to be reviewing all of our quarterlies that they come out. I can agree with you that it was a company, it was a make, and moving forward as a venture company, like I'm very excited what's on the horizon, and it's our job to close that gap between at least the book value and what we're trading at.
Yeah, hopefully things keep going up. Lots of it. I'm so pumped. We have some private companies in our portfolio that look so fun. I think that, good venture ideas come from people, right? So the bigger your network, the better your relationships with people. And that's what you're kind of seeing grow here, as whether they're shareholders as leads or they're partners in Treasure Hunt or whatever it is, like the more good ideas that come to you, right? Like, so I think that's what I'm most excited about. It's just that the growth of the quality of the network that's growing. It's just, it's getting really fun. So hopefully that translates into some really great 2026 success.
Okay, Matt. So last point, you just closed off your financing, and good luck with drilling, and hopefully we see some assays kind of trickle in here and there and give us a good Christmas present, eh?
11,200 meters was drilled between August 5th and now. We have 29 holes done, and we've released one. So, I think that it's an early story. We got, there's a lot of luck involved in having a discovery really early on. I think this thing is going to be really exciting. We should have a couple different news releases over the next 2 months. We're going to have bulks of holes come out as they go. We stopped assays from coming from the labs during the financing because that's totally messes with your deal when there's material information that comes in while your financing's open. But yeah, I think that we didn't have a lot of money, didn't have tons of money this year, drilled 13,000 meters. So we'll have an aggressive 2026, really fun financing, really great book. So I'm pumped about this one. I think that this is going to be a special project.
Okay, so if you're a shareholder of Sterling,
I am.
and you'll go into a draw for a piece of Matt will give you a piece of Bornite or a chance to win a piece of Bornite. I just created a contest for you, just like a great Canadian.
100% not happening, but we could not happening at all. I will keep the Bornite, and but I will. We could go to an outcrop and we could chip it off together, and you could take a sample, or we could. That's a good one. We could. I don't know what the contest is here. I don't know what a contest here is. There's so much copper coming out of the ground in this project that you could just walk over and just chip it off. So,
all right. Thanks, Matt.
Thanks, man. Take it easy.
Bye-bye.